Yo, YouTube family. It's your boy, 100K Steez here, and this video is gonna be full of gems, guys, full of sauce, guys, okay? Full of value for my loyal subscribers or anybody else tuning in on the YouTube page. If you haven't subscribed already, go ahead and do yourself a favor and subscribe right now so you can stay plugged in and know when new content comes out. Now let's get to the topic at hand. In my last video, how to flip a Forex account the right way, this video went crazy, by the way, guys. Thank you for all the support and love and engagement. I love to see it. It lets me know that I'm on the right track. But yes, in this video, I asked people to drop a comment if they were interested in seeing a video about identifying momentum. And we got quite a few comments. So I went ahead and put together this video for you. I'm gonna break it down step by step and really show you how to start identifying and really seeing momentum in the market. I broke it down to 5 steps which will help you make it make sense. But let me be clear.
But let me be clear.
You actually need to really sit down and digest all this information. I'm breaking it down into 5 steps, but guys, I really recommend you go through this video 3 or maybe even 4 times to really understand it and put it all together, okay? So that's just my recommendation. Like I said, repetition is the mother of all learning. So plug in with me, guys. Let's get into step 1. Understanding your pair, right? This is very important, guys. I see a lot of times where people would have over 1,000 pairs on their watch list, and it just doesn't make sense how you're going to be able to actually hone in and understand 1 or 2, max 3 pairs. It just doesn't make sense, guys. This is the first step. You have to know what pair you're messing with. And this can get deep, okay? Because certain pairs are going to do certain things at certain times, right? Session times start to kind of correlate as well. You have to understand that session times are in conjunction with the pair. So let's just take GBP JPY for example. We understand that around 7, 8 o'clock EST, you're gonna get that Asian session pump, right? And then around 3, 4, 5 o'clock in the morning AM EST, you're gonna get that push for London. So you have to know your pair in correlation to the session, and that's gonna also help you understand when momentum is actually gonna come in at certain times where volume is actually showing up. Okay, so just knowing the session times in correlation to the pair is automatically going to put you ahead of the game. Okay, also in correlation with that, pairs have different ways of movement. Certain pairs are going to wick way more crazier than others. Like let me give you guys an example of AUD NZD right over here. I'm telling you guys, this thing is wicking all the time, guys. You have to know what pairs do what, because when a pair is going to wick you out, you're not going to be as scared because you understand this pair is actually, that's just how it acts, right? So that's very important to understand. So the sessions, and then you got how the pair acts, okay? Those 2 things are gonna help you identify momentum when it's time, because all the momentum is price moving at a faster rate at a certain time, guys, at a certain time. And your job is to understand what time actually it's more than likely to happen, okay? There's no set time when it's gonna happen, but like I said, when you line those sessions up, you line up different, times in the market, you'll actually understand when the market is potentially going to move at a fast rate. So that's going to be step 1, guys. I know that's very, very simple and straight to the point, but I'm telling you guys, super, super important. Whoa, stop real quick. I know this is not an ad. This is your boy, 100K Steez. I wanted to stop the video because I wanted to really talk about this MTC chat right here. Boy, we've been kicking and screaming and dropping so much value in here, and I want you to be a part of this. So look, check the link out in the bio. You're gonna get instant access to all these resources, all these trade signals, and just all this education on how to start learning to make money in these markets. Guys, don't worry about paying for anything. All you gotta do is click the link in the bio, join for free, ask me questions, whatever you need to do. We got live calls, all that under the sun, at no cost to you. So check it out below, guys. Get instant access right now. Like, press the link right now. I'll wait. Wicks matter too, guys. Like I'm saying, like you have to know these things with the pairs. And this is where backtesting comes in at. Check out Backtest with me session 1 and 2. We're going to be dropping another one this week as well. But this is why I do the backtest sessions, guys. It's very important to understand how pairs behave at certain times, at certain sessions. Everything, guys, everything has to be put together so you're able to identify when something is going to come in, when momentum is on its way, when it's stopping, all that stuff, guys. You have to put it all together, and this is the first step. Bigger time frame outlook. This right here, guys, I'm telling you guys, I say this on almost every video about top-down analysis, and I feel like I'm just a broken record at this point, but I need you to really get that the top-down analysis is only gonna help you when it comes to identifying momentum, but it's also gonna help you just in general. Like when you have the overall lookout of where the market is potentially going, you're able to really understand when momentum can start kicking in and how to make it make sense. Because let's say we're on a higher time frame and we're looking at daily candles or weekly candles, and you see that we're in a bullish market. We understand that anything that's happening on a smaller time frame, such as an hourly or 30-minute, that's bearish, more likely a retracement. Okay, and we're not going to be looking for quote unquote momentum at that point. It's just kind of foolish. So when we line up our bigger time frames, we're able to actually understand when that momentum will start to kick in. And so the trick that I use usually when finding momentum is I'm looking for a swing setup. Okay, I'm on that 4-hour, I'm on that daily, I'm looking for a swing trade setup. So when I initiate the swing trade setup, it doesn't mean momentum's in yet, but I do know that at a certain point, this could go into momentum because I'm following the bigger time frame. Okay, so let's say I take a 4-hour or a daily signal. I understand that, okay, cool. If this thing starts to move, let's say I take the signal, at 6 or 7 o'clock. It don't mean momentum's going to kick in then, but let's say around 3 or 4 or 5 o'clock in the morning, now that market is finally pushing. And it's like I'm already in that swing setup. So like I'm already confident as far as where the market's going to go. So when I'm scaling in, I'm not like, oh man, should I scale in or should I not? Like I'm already set on my swing setup. My swing setup is telling me, hey, look, man, we're looking for, 200, 300 pips here or whatever it is, guys. Okay. So that's very important to understand. I can't stress that enough, guys. Like the higher time frames are going to tell you everything every single time. If you're not doing a top-down analysis, go ahead and hang it up right now. I'm just telling you. I'm really just telling you. Top-down analysis, guys. That's going to be step 2, okay? Step number 3, and here's the big one, okay? Here's the big one. So I need you to listen up. Finding accumulation, okay? What is accumulation, right? Accumulation is kind of like, I don't want to say it's like consolidation, but it kind of is, guys. I'm not going to lie to you. The way I look at the market is I just look at what price is doing. You can name it what you want, okay? And if you have something to name it, that's fine. I don't really care. When price is going back and forth, it's consolidating or accumulating. That's all I can see. That's all I can say, okay? So when price is accumulating, this is when we understand that momentum is on the way. Price is loading up. This is what I said in the previous video of Backtest with me part 2. When price is loading up, that's when momentum is about to start kicking in. You never really want to identify momentum when it's happening. You want to identify it before it happens, okay? You want to identify it when it's loading up. And a lot of times, it's not just consolidation or accumulation. It's when price is consolidating or going back and forth in a certain direction. Let's say we're in a bullish market. I'm going to give you guys a couple of examples as well. So just stay tuned. I'm going to give you guys some chart examples right after this step, okay? But anyway, let's say the price is accumulating, but it's also like moving up in an upward motion, That lets me know that, okay, price is consolidating, but it's looking like it's putting pressure to the upside. And guess what? If we already have the analysis on the higher time frames of a bullish market, everything is lining up. You see what I'm saying? So you have to follow the steps, guys. And then the momentum will actually show itself, and you'll see it before it happens. And that's when you really can load up. And that's what I usually do when it comes to identifying momentum. Finding accumulation is actually, sometimes you get caught up. And it could be the hardest part of actually understanding how to identify momentum. But if you can identify accumulation, you indirectly find momentum, if this makes sense, okay? So if that doesn't make sense, please drop a comment below. I can explain it, maybe maybe we can get on the phone or something, because it's like I said, it's kind of hard to explain this stuff, guys. But my job is to make it as simple as possible. Okay, so I'm gonna show you guys some live examples. Maybe that will help. Okay, so you guys can understand that what accumulation looks like. And 9 times out of 10, guys, accumulation looks different every time for every pair. Okay, so accumulation is a act of what price does. Now, what it does exactly, I can't tell you that, because it does different things at different times. If the market's bullish, it can give you a different type of movement or consolidation or accumulation that would look different in comparison to maybe the market selling. Okay, completely different, but same concept. Okay, so I'm gonna show you guys really quick in this chart video. I'm gonna just break it down and find a couple examples, just a few pairs, so you guys can start seeing it. Because once you start seeing it, I'm telling you guys, you're gonna see the market a lot different. So let's lock in. All right, guys, so I marked the heck out of this area here because I want you guys to see what I'm seeing. I boxed out the range, but right here is where price started making higher lows. Okay, this is very important, and that's the first sign. And then we have this bullish engulfing right here, right? And that is the first sign. So as you guys can see, price continues to go up and make higher highs on the candles, and that's very important to understand. And price candles start to get longer, right? As you guys can see. And then we have these wicks. Wicks are good, guys. Wicks are really good, especially when they come down and wick and then close higher. Beautiful. That's a beautiful fishtail right there, as a matter of fact, right? Fishtail, fishtail. Okay? So this is a perfect example because, as you guys can see, it starts to push up. And really, you would start catching it around these candles. Okay? So hopefully that was helpful. That's just one example. Let's go to another one. Actually, it's one right here, which is funny. Price again. Here's another example, somewhat. And so price kind of creates this wedge, this compression, right? Price wants to break the highs. It's clear that it does because it keeps closing up there. And then we get the firm break, right? The firm break is the initial. Boom, we're in there. And as you guys can see, it shot up. Yes, it retraced back down to this level, which is interesting how it engulfed off this level right here and then kept moving. So that's momentum at its finest. Price kept making highs after that initial break. And as you guys can see, like, you have to pay attention to price. Like, price doesn't just do random stuff. Look at this close here. That wick up there closed higher than everything above, or everything prior, right? As you guys can see. And so that is the initial push that lets you know that, okay, we're ready to go. So that's another example in itself. As you guys can see, price did give us this bearish engulfing, but I'm not falling for that because I understand that price is just trying to play with us, grab whatever it wants to grab before it aggressively moves up. So that's another great example. So one more example, guys. We're going to go. We'll just keep going really quick here. Find something. There's a lot of different examples, but I'm trying to find the best ones to make it make sense. Let's see. Yes, here's one. So initially, look, we have the structure break, right? Start making lower lows. And right here, as you guys can see, we have our consolidation / accumulation. And what's interesting is price stay below the MA. Okay, very, very important to understand. And so when price continues to stay below it and then it starts to break down, this right here is your initial move. Okay, price made a lower high here. And then it continued to break down. And of course, it retested this area. So if you missed it, this is your entry. Bearish engulfing right there. Stop loss above there. And you could take it down. Now, targets and all that have to do with the higher time frames, like I said prior. Okay, you have to understand that. But this is clear sign of momentum, especially when we get this consolidation. It lets you know that price is loading up and ready to go. So that's 3 examples on one pair. Hopefully that was helpful. So step 3, guys, like I said, finding accumulation. Accumulation is the sign of momentum. If you find an accumulation first and you watch it happen, you watch it load up, you're on the right track. You're in front of that momentum push because that's where you want to be at, okay? Candlesticks and price action. So step 4 is simple, okay? We're looking at certain candlesticks that let us know that momentum is about to kick in. And it usually, so in this case scenario, you're usually in a bullish market, okay? So usually we're getting higher high and higher closes on different time frames. And a lot of times, guys, you want to go through each time frame, and if they keep closing higher on each time frame, that lets you know to keep in the trade, and it lets you have that confidence to stay in and not feel like, oh, am I doing this wrong? Because the last thing you need is to not be confident in this market, especially when you're scaling in. You have to be very precise and very confident, because if you're not, you're going to lose, okay? So candlesticks and price action, they go hand in hand, especially when it comes to momentum. But this, guys, I need you to understand, this is the reason why this is step 4 is because you've already identified the pair. You know what you're looking for, right? Certain pairs are going to give certain candlestick patterns, okay? You got your fishtail. I showed you guys that in the last video. You got your pin bar, okay? You got your bullish engulfings. You got your bearish engulfings. These are just different patterns. And there's also 3 candlestick, 4 candlestick, 5 candlestick patterns that I can show you, like, that I've seen visually. I don't really know what they're called, but I've seen them enough to know, okay, cool. This market here came down, gives me a doji, and then gives me this engulfing that's closing higher than the previous candle, not the previous one that just came out, but the one before that. You get what I'm saying? So I'll show you guys a picture, maybe some examples as well on the charts, so you guys can get what I'm talking about, because it's a lot easier to show you than to tell you.
Perfect example of what I was just talking about in the video. So here it is. As you guys can see, this area of consolidation happened. But what we've noticed is we are in a bearish market, correct? Okay? Market is pushing down. So we already know that, okay, I'm looking for downward movement. When this initiates, it pretty much tells you it's over, it's ready to go. So as you guys can see here, this is what I'm talking about. I just showed you guys a picture for a buy scenario. This is a sell scenario. The market gave us this doji right here, okay? Let me zoom in. Gave us this doji, tapping that MA as well, tapping that zone. But then when this candle here closes like this, it's nice and long, right? Pause. And right here, we get a close below the last 1, 2, 3, 4, 5, 6, 7 candles. And these are 4-hour candles, guys. So price action was just destroyed. And that's the initiation of a trade right there. Okay. Now, this is on the 4 hours. So you can go into smaller time frames and catch movement. This whole candle right here. Wow. This whole candle right here, you could be catching entries. Okay. And that's a perfect example of what candlestick patterns can tell you about momentum. Perfect example. So I'm going to find another one really quick, but this is a great one, guys. So let's see. This one's okay. Let's keep looking, though. We'll find something, guys. This one's good as well. This one's a little bit, this one is a little bit, I wouldn't say controversial, but like, we're on a 4 hour, so if you do see this close like this, you're in, right? You just need to go into a small time frame. So as you guys can see, price kind of came into this consolidation, accumulation area, and gave us this big seller's candle, close aggressively below, tons and tons and tons of price action, right? And that's the initiation right there. You move into a small time frame, you catch entries here, you catch entries here. This is a pullback, and you just take that thing down. I mean, you just take it all the way down, okay? Perfect example. So let me find one more for you guys. You guys see this? I mean, look at this, okay? Let's find one more example. So let's find a buy example. See, in this case scenario here, see this big move down? Not a fan of that, of taking a trade right after the engulfing, especially on a 4 hour. But I do know that we'll get some movement after. As you guys can see, the market pushed down further after. And of course, it pulled back, but then it pushed down further after, okay? Let's see. Okay, here's your little engulfing tweezer bottom situation, right? Here's another candlestick pattern right there. Perfect example. We get this resistance. Resistance is actually right here, but what I also notice is the wick, okay? Wick is important. Wicks are important. We have this wick here, but then this one wicked here and technically made a newer high wick, Very, very important to understand. So that's a great example as well. Let me find like a 3 candlestick pattern or 4 candlestick pattern. So here's a 3 candlestick pattern. I would never take it on the 4 hour, but it still worked nonetheless. It's 1, 2, 3. All of them went up and they all closed higher. Okay, I can't spell. Wow. They all closed higher there, right? You guys see that? This is a perfect 3 candlestick pattern. As you guys can see, I mean, guys, it's the same thing over and over again. We have the zone consolidation, and like I said, price in this case scenario consolidating, but it keeps pushing to the upside, making higher lows. Like, guys, rinse and repeat. As you guys can also see, the MA is way below right here, way below. So that's also another sign to stay in that game, okay? So that's a perfect example of a 3 candlestick pattern. There's a couple more, but you know, for the sake of the example, I just want to show you guys the best ones. So that's 3 examples just, you know, within a few minutes or a minute or two of me showing you guys. So this is perfect example of candlesticks and how they can initiate momentum and let you know when to actually start scaling in or start taking your positions. And you know, you could take entries off of every close, you know what I mean? So yeah, perfect example.
Creating a scale-in plan. Now, this is the last step because once you've mastered and understood the process on how to identify momentum, how to scale in, everything is set up, right? You follow the first 4 steps. How do you implement this on a week by week or month by month or whatever it is that you want to do, right? What the first thing you have to realize is scaling in and scaling into an account, in my opinion, it's a separate thing as far as your trading plan, okay? It needs to have its own rules and procedures because, guys, this is a high risk, high reward situation. Yes, we're not gambling, guys. Trust me, we're not gambling. This is very, very precise. The precision is on 100%, and you really have to be focused. So you need to set up a plan that's going to allow you to be focused at times of being focused and stepping off when it's time to step off, okay? So you need to have profit target goals. You need to have times where it's like, all right, this is not working. You need to have psychological blockages, psychological rules and barriers. There's so many different things that you need to have with your plan that I'm going to go ahead and explain really quick, okay, guys? So I'm going to give you guys 5 things that you should highlight when you're creating a scale-in plan, okay? So number 1 is going to be psychological barriers. Because trust me, guys, when you're scaling in, you're talking about risk. All right, you're putting yourself in a position where it's high dopamine, it's high risk. So you need to know what you're doing. What's your levels of psychological levels, right? And I mean not psychological levels in the market. I mean like in your mind, okay? That's going to be the first thing. The second thing is going to be risk, okay? How much are you risking? How many entries are you taking? You need to have this down, guys. You need to have it written down. I'll take 10 entries or whatever it is at a 0.01 lot. Figure it out, guys. And it depends on what each account size that you're messing with, how you want to do it. Number 3, is this going to be on a separate account? I suggest you put it on a separate account because, guys, it's a different game, okay? You don't want to mix them up. You don't want to be swing trading and then doing this. You know, you don't want to do that, okay? You need to just separate them, okay? So that's the third thing. The fourth thing is going to be understanding when momentum is not on your side, okay? When do you identify when it's not on your side? And 9 times out of 10, market structure will tell you, okay? So really number 4 is more about what are you willing to lose, okay? So when accumulation is not working / how much are you willing to lose, okay? You need to have this number, guys, okay? You really do, or you're going to be screwed. I'm telling you. It's not a joke. You got to tap in, okay? And then number 5 is what's the frequency? How often are you doing this per week? Do you do this every trade? Like, what is the plan, okay? So those 5 things, in my opinion, are the first 5 things that you need to kind of ask yourself, write them out, explain it, and put it separately. Like I said, it needs to be in addition to your journal, okay? Not your journal, but your trading plan, okay? This needs to be something you add on, okay? Because this is very, very, very different than just actual trading, okay? So don't get me wrong, guys. If you want to incorporate it, you're going to have to sit down and really figure out how that makes sense because it's, like I said, it's super, super challenging. But it is doable, guys. Anything is possible in this game. So you need to understand that, okay? So that's going to be the 5 things. as far as what you need to focus on, and that is step 5, okay? Creating that scaling plan. Bonus tip. So the bonus tip here is gonna be simple, and I'll explain it after I give you guys what it's gonna be. So the bonus tip is gonna be patient and fail fast. Now, that sounds crazy. I get it. I know it does. But I need you to understand why I put this as a bonus tip. This skill alone takes practice. But scaling into a market and understanding the market at a precise level takes a lot, and I mean a lot of practice. And in order to actually get this, you need to fail a lot of times. So I suggest you don't fail on a regular account, okay? Don't fail on a live account. That's probably the dumbest thing you can do. Get in the demo account and get comfortable understanding the markets, okay? Fail as fast as you can, okay, guys? Because you really need to understand that this is not a joke, okay? I know that, people on YouTube, they tell you this and that, but it's really not a game, guys. You really got to focus, okay? Another tip that I want to just throw in there because, you're clearly this far into the video, and I'm just spitting gems to you at this point. But 9 times out of 10, guys, when you're doing this, you really want to be sitting in front of the chart, okay? You don't want to just be scaling into stuff and just leaving, okay? You don't want to do that because, like I said, precision takes concentration, okay? I'm going to say that again. Precision takes concentration. So you really need to be in front of the charts, scaling into that trade and managing it as it goes. Now, don't get me wrong. After a certain point, when that pair starts to take off, you can move stop losses to break even and you can go to bed or whatever you want to do. That's fine. But while it's happening, you really need to be scaling in and you need to be sitting down and focusing and concentrating. So that's just a quick little, I guess, a bonus tip. Since you got this far in the video, why not, right? That is actually going to be the end of the video, guys. I did make this very, very simple and to the point, but I broke it down into 5 quick steps that actually make sense and you're able to digest it. But like I said, go through this about 2 to 3 more times. And of course, drop in the comments with any more questions, comments, or concerns about how to scale in, how to Forex flip, whatever you guys need, guys. Put it in the comments below because I will make a video and I will put my time in to serve you. All right? So, without further ado, like I said in the beginning, like, comment, and subscribe to your boy, okay? And we'll see you in the next one. Let's get it.